What's going on, guys? Today I have another very exciting video for you. This one is inspired by a comment that we have here from David Frank. So he was asking to see what my top 5 value stocks that I see in the market right now are. And basically I had an idea a few months ago to actually make a tier list of a lot of stocks. I was kind of waiting for my YouTube to grow a little bit larger, so I had a more audience of, people who were interested in this type of content. But here we are. We are going to make this video anyways. I was really bummed out yesterday because I actually scrolled through YouTube and I saw Joseph Carlson made a tier list video just 2 weeks ago. And honestly, I have not watched this video. I didn't want it to influence my picks here, but I am going to make this video and I hope you guys really enjoy it. If you do, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And if you have any other tier list ideas that you want to see out there, make sure you leave a comment down below. There are 2 things that I want to touch on before we get into the stock picks. The first being, I am some random guy on the internet. That means that you should not be copying any of these picks. Just because I put a stock in the A tier list or the S tier list, it does not mean that you should go out and buy that stock. You need to do your own research, look into these companies, and see if they are a right fit for your portfolio and your investment goals. The second thing is, what am I actually looking at when I'm evaluating these stocks? The first and most important is the business. So what is the underlying business? What do they do? What are their long-term revenue projections, EPS projections? Do I see the business being stable over a long period of time, 10, 20, 30 years? And then also, what is their market share? Do they own the majority of the market? Are they very competitive and one of the top 3 players basically in the market? Valuation is the second most important thing. So that comes down primarily for me to PE ratio. And again, looking at their earnings, are their earnings going to raise over time? Do I see the stock potentially falling a little bit more in the next 3 to 6 months where I could have a better buying opportunity? And then risk versus reward. So if I put $1 in or $100 in, what is the likelihood of my money doubling or tripling over the next 3 to 5 years versus what is the likelihood of my money going to zero? So again, it's important to understand what I'm actually looking at and what I'm actually ranking these stocks based off of. And that again is the business, the valuation, and the risk versus the reward. Alrighty guys, let's go ahead and jump into this. Here you have all the stocks that we are going to be looking at. And then you have the S tier through the D tier. If you're not familiar, S tier is the best. And then in each tier, left to right, you have best to worst. And then at the very end of this video, we will actually take a look at our final tier list and basically reevaluate. So if we need to shuffle things around just a little bit, make sure you stick around till the very end to get the final and full tier list. So let's go ahead and jump into this. First stock up here, we are going to be taking a look at AMD. So AMD, in my opinion, is a very good stock. It's very interesting for where it's at. Its valuation is actually lower than an NVIDIA, which we have back here in the list. But right now, I still think it could have a little bit further to drop. Obviously, Black Friday came out huge, and that could really positively impact the stock. But I'd love to pick it up at a lower valuation. Right now, its forward P ratio, I think, is sitting around like a 20 to 30, which isn't terrible, especially compared to NVIDIA and some of the other players in the market. But right now, I'd probably put AMD as around a B tier, just because it's something that I'm looking at. If they creep into this kind of A tier, I'd probably be interested in them. But right now, they're kind of sitting on that edge. Next stock up here is Amazon. So Amazon is one that I've made a few videos on, so I'm not going to go too in depth. The biggest problem that I have with it is valuation. If we see a lot of growth investors, if basically we see Amazon's growth start falling off, we'll see the growth investors start funneling out of the stock and it'll become more of a value stock. And when value investors are looking at the stock, they aren't going to get in until the PE ratio falls to around a 20 to 25 is really where they'll start getting in, potentially maybe even 30 for some of the higher end value investors. But overall, the business, in my opinion, is better than AMD. I think they have more potential, to basically keep their growth up, and they have a lot stabler business. So I'm going to put them just slightly above AMD, also in the B tier. The next stock up here is a very interesting one. It is Activision Blizzard. And I actually really like this stock, and it is purely a risk versus reward play. When you look at the company, I don't think they have a tremendous amount of growth. I do think that video games will continue to grow at a very fast pace, but overall the company, they went through some hardship. This is solely based on their acquisition with Microsoft. So Microsoft announced that they were going to acquire Activision Blizzard at $95 a share. Right now the stock is sitting around like $75, and it's been bouncing between like $70 to $76, kind of somewhere in that range. So there is a potential upside of around 20 to 25% in this stock, even 30% if you get towards that lower range. And basically what that equates to is a very low amount of risk. Warren Buffett has actually piled a lot of money into this stock because he sees it as an arbitrage play. And when I kind of look at other companies and I don't see a whole lot of value in the market, I have actually been putting money into Activision Blizzard just because I see it as almost a zero risk 20% return. So that is why I would put this as an A tier stock. The next stock up here, and I've made plenty of videos on this, so I'm not going to go too in depth, is Alibaba. The biggest thing again is the business, the underlying business I see is great. Their biggest difficulty is just US, China, then the whole relationship there. In terms of risk versus reward, they had one point were above $300 and right now they're below $100. So there's a tremendous business opportunity, tremendous amount of opportunity in China in terms of their population and how much growth they could have ahead of them. And then there's also a tremendous amount of value in the stock personally that I see. So for that reason, I have them as a high A tier. I do think that the risk with China and potential delisting actually knocks them out of the S tier. But if some of that still falls apart, maybe in the next 2 months, if the SEC gives a thumbs up on them staying listed in the New York Stock Exchange, I could actually move that even up to an S tier. Next up here, we have Google, and Google is absolutely insane in terms of its search engine. It has a 92% market share of search engine searches. And on top of that, they have an incredible balance sheet. The only problem I have been able to find with the company is their overall employee costs. They have an average salary of around like $250,000 for their employees, which is absolutely insane in my opinion. It's way higher than a lot of the other players like Meta and Microsoft. And honestly, I think they'll kind of start turning that around. I think they'll start looking at their employee costs, start bringing those a little bit more down and in line with other competitors. And honestly, for all those reasons, I think the business is absolutely amazing. I think their valuation right now is fairly good. And then I think their risk versus reward is actually very high. I think they could easily go back up to around 150, which I think is where they kind of topped out at, versus going down to $50. So for all those reasons, I have them in the S tier. Meta, in my opinion, is S tier, and I'm going to get into that in its own video. I'm going to release a video on Meta over the next week. They came out with a commercial that has to do with the metaverse, and I think it's super important to lay out and try and help people potentially understand what potential the metaverse actually has moving forward. So I'm going to get more into Meta in that video, but just for this video, valuation absolutely incredible. Their business, they still have the core business that was valued at like $350 a share just a year ago. The only difference is, obviously their advertising has gone down a little bit over time, and they've spent a ridiculous amount of money on the metaverse, which the metaverse I see as being an absolutely massive opportunity. So business, great. Valuation right now, insanely low, and their risk versus the reward is incredible. I think they have a lot higher likelihood over the next 5 years of going to $500 than going to zero. Next up, we have Microsoft, and Microsoft is one that's a little bit similar to Amazon. I do own Microsoft, but I'm not actively adding to my position, and the biggest reason for that is their valuation. So business, absolutely phenomenal. They have basically the market on lock. They're able to price things as they want for their products, and they have cloud business. They're growing in cloud. They're doing everything right in terms of the business. The risk versus the reward is not very high. You really don't have much risk to the downside. I don't see them trading incredibly lower than where they're at right now, but also I don't see them blowing up over the next year or so and shooting up 50%. So for that reason, basically, and their valuation, they're kind of an A tier, lower A tier. If their stock drops off a little bit, let's say it drops another 10-15%, then I'd be very interested in starting to add shares, and it would probably easily jump into the S tier if that were to happen. Next up, we have NVIDIA, and NVIDIA I actually have been kind of interested in. I was looking at the stock when it was around like $115 and really considering purchasing a few shares, but then it just bounced up and has gone crazy since, and it's always traded at a little bit more of a premium. So They are a direct competitor with AMD, and honestly, AMD trades at a lower valuation. So I kind of debate whether I want to put them in B, just because they do have a similar business and they're actually business-wise actually in a better position than AMD. But in terms of their valuation, I just don't know if they actually warrant it. I think I'm more likely to buy an AMD, which is a number 2 player in the game, at a lower valuation than buying the number 1 player, NVIDIA, at a higher valuation. PayPal's a stock that I've been keeping a close eye on. They have been trading really low, around like the $70 to $85 range, and the stock was around like $300 or $250 or somewhere in that kind of range just like a year ago. So they've fallen off in a massive way, but honestly their business seemed to be very reliant on eBay and their basically partnership that they had with eBay, and that actually went away, and I don't know how much that's going to affect the business, so I haven't really pulled the trigger. The other thing is I also own Visa, and Visa kind of gives me exposure to the same market that PayPal's in, but Visa has like a 52% market share of the credit card business. So they are the number 1 player by far. So I've kind of just stuck with them. PayPal is probably like number 3 after MasterCard. So I've never just really added a position. And for that reason, I do think they have a good value, but I'd probably put them lower here in the B tier. Shopify is another one that I've been kind of interested in. I've kept an eye on them. They've traded really low. They've traded down in a massive way. The biggest problem for them is they aren't yet fully making money, right? They have a couple quarters where I think they've made a little bit of money, a few pennies and whatnot. So they do have a PE ratio, which is astronomically high, but it's hard to determine, if the business is going to be a success over the long term. I do think they have a lot of positive things going for them. I've actually personally used them before to create a shop, and it's a great experience. They make it really easy to build your own shop and whatnot. And overall, I think they have a good business model moving forward, but I just want to let them play out a little bit longer and just see if the company will get to a profitable state and a consistently profitable state. So for all those reasons, I'd actually put them down here in the C tier. So NVIDIA actually makes money, has a somewhat decent valuation where their PE ratio is under 60. Shopify still just hasn't established their business, is what it comes down to, and basically haven't established a valuation that's fair for the company either. So that's why I'd put them here in the C tier. And last but not least, we have Tesla. Tesla's one that I've made a video about around a week or 2 ago. And basically, again, the biggest problem that I have for them is their valuation. They've fallen off in a major way over the last kind of few months, and they've kind of had a very volatile year, which is typical for Tesla. But it's hard to determine, again, if they're going to end up like a lot of these other car manufacturers where their PE ratio falls down to like around a 10 PE, because right now they've just traded at such a high premium for such a long amount of time. They have an insane investor base that just has a lot of faith in the business and where it's going over time. And it's just a matter of, Elon executing on that business, which right now, again, he's involved in a lot of drama with Twitter and whatnot. So it's just hard for me to basically buy a stock where the CEO is not fully focused on it. So for all those reasons, I'd probably put them either here or here, either before or after PayPal for where I place them in the B tier. So that wraps up my tier list. I'm actually happy with everything and where I placed it. I think everything is valued the way I would look at it. Again, I'm going to make a video on Meta going a lot more in depth than what we talked about in this video. But to be fully transparent, I do own Meta, I do own Google, I do own Alibaba, I do own Activision Blizzard and Microsoft as well. I am actively buying at this time these 4. I'm actually very interested in. Again, whenever I feel like my portfolio is getting over kind of weighted to these 3, then I'll add some Activision Blizzard just to kind of balance it out a little bit. Again, kind of just based off the risk reward portfolio of Activision Blizzard and their acquisition with Microsoft. So I'd love to hear what you guys think. This B tier is kind of my watch list. There's stocks that I'm watching where if a couple things change, valuations kind of change with them, then I'd be interested in potentially adding them to the portfolio. But again, I don't have any positions in these. And then kind of something similar with C tier. They just need a few more things things to change to kind of get them, you know, to more interesting valuation. So let me know your thoughts in the comment section down below. I'd love to hear if you disagree or agree with any of my picks, and if you actually own any of these stocks, let me know down in the comment section below. But if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.